You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody. That music means we are back. It is Wednesday. Time to talk about some futures. Yes, it is time once again for the Futures Rundown. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are mainlining. You know, to me, this is still one of the new shows on the network, and it is. Yet since we've launched this, we've added two new shows, the European Market Brief. So if you like a little bit of the European flavor to your derivatives trading, that's the show for you. And of course, just in the last week or two, the Hot Options Report hitting you every day on the network. So even more reasons why you should be subscribed to the full network, wherever you get your favorite podcasts. And of course, if you want to go above and beyond, check out the awesome AMA we had yesterday. Come up, Options Oddities, with an awesome special guest on Friday. I believe it might be episode 200 of Options Oddities, in which case we're going to do it up right. I also get your name in the hat. You got to get in there before Friday if you want to get your name in the hat to win the July Pro Trading Crate. Only one place to go to get all that. theoptionsinsider.com/pro, P-R-O, the place to go to learn more. As we learn who's joining us on the old Futures Rundown program this week, I'm pleased to welcome back on our old pal, none other than Dan the Man Gramza from Gramza Capital Management. Dan, welcome back to the Futures Rundown, sir.
Well, thank you very much, Mark. Great to be with you.
Great to be with you as well as we collectively enter the trading pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, everybody, welcome to the Trading Pit, the portion of the show where we tell you what's lighting up the futures market this week. And I have a lot of movers and shakers I want to get to, Dan, but of course, I want to get your thoughts. What's lighting up your tape? We are recording this at an interesting time, of course. Our old pal, Jay Powell and company, just popping off a few minutes before we started the show, keeping things as expected, unchanged. Mentioning the threat of high inflation, rare dissent from two members of the Fed against Powell, which is kind of showing, Dan, some of the politics working its way in. Maybe some folks auditioning for that top spot down the road a little bit out there. So a little bit of politics working its way into the supposedly independent Fed. Weird how that always happens, Dan, whenever the White House pays attention or whenever we're talking about time to renew the position. Then all of a sudden, the independent Fed becomes a little bit less independent. But it seemed like the market was okay with it at first. Now it seems like we're selling off a little bit into the red. Nothing wild out there, listeners, but the major equity indices are turning and vol's getting a little bit spicier out there. Let's start there, Dan. What are your thoughts on what we saw out there from Powell and company today and the market's reaction? And then what else is catching your eye in the world of futures this week?
Well, first, I think what Powell's doing is right on the money. I think they shouldn't be doing anything right now. Do they really have an excuse? I don't think so. It's a labor situation. Okay, yes. Do we have high inflation? No. So, and do we have price stability? Those are the three things they focus on. Now, when you look at Trump, his focus is on something different. He says, doggone it, we're spending right now $1 trillion on interest on our debt. So lower interest rates, cut that back, lower our average cost of business. He's looking at it from a business point of view. The cost, we're spending more on interest than we do on defense. So I get that. But from Powell's point of view, their job is to watch inflation and unemployment. And right now they're stable. Do they do something in the future? They're saying yes. Maybe September will do something. But right now, we don't know the total impact of the tariffs. And I think Powell's doing the right thing. So what's interesting is how the market's absorbing that. If you look at the stock market, it is down right now, and it implies further weakness. However, if you look at the indices, we are right at levels that we found buyers before. So be cautious if you're on the short side for this market. The next couple of days, we have a lot more fundamental information that can have an impact here. The dollar continues stronger across the board when it comes to the currencies. I don't look for that to change. However, structurally, if tomorrow, if Thursday is an up day and we cover the range we have today, which I call an equal and opposite, then look for a strong close going into the weekend. But right now, dollar is dominant. That's what we're seeing there. Bitcoin, I'm looking for a sideways market. The bias is for a move to the upside. The 10-year notes, 30-year bonds, their prices have come off because yields went up a bit. So that's logical. Look for a sideways move there. Gold also, we're seeing some weakness. Silver the same. Look for that to continue. Copper is falling out of bed with the 50% tariff now in play. So we can talk more about that, but that's really interesting. Crude oil is firming up. The Russia situation's adding a little pressure here. I just don't see it being sustainable, but fundamentally. But fact is, price is going higher. If you're long, you want to stay long. Nat gas, we have a lot of nat gas out there in our country, so we're seeing some downward pressure on that. Look for a sideways move there. The ags, beans, corn, and wheat, the July and August is critical for these crops. And right now, I'm looking for continued weakness to a possible sideways move in those markets.
All right, let's see what's lighting up our tape this week to the upside and the downside out here. Let's keep things positive. Let's start in the upside, listeners. We're going to kick it off this week with our old pal, one of the EMs, maybe not the one you'd expect, not uranium, but lithium lighting it up slightly to the upside this week, up about 3 2/3% for the number 5 spot. Number 4 going out to energy. It's our old pal, RBOB, up nearly 5.5% on the week. Number 3, we got a bit of a combo here of the big and small Ether. Get used to hearing Ether talked about on the show in a little bit, listeners. It's been another good week for Ether, up about 5 3/4% on those futures for the week. And then number 2, back to energy. It's our old pal Brent, up 6.83%. You know, if Brent's number 2, Can you probably guess what's number one? Yeah, it's our old pal WTI, up 7.3% on the week out there. So things getting a little bit spicier out there on the crude oil front after seeing a decent run to the downside. In fact, a lot of our guests on the network of late have been talking about what happens in products like WTI if we break through the 65 handle to the downside. Well, getting a little bit of upside back this week. Dan, what's catching your eye in our upside movers for the week, sir?
Well, I think what's interesting, let's just start with Ether. You mentioned that one. That's really attracting a lot of attention. We have seen some volatility, but the last couple of days we're seeing sellers at these higher prices. So for the week, it's done well, but I'd be cautious if you're on the long side of that market. On the energy front, I'm not really sure that we have fundamental support for crude oil prices and Brent where we are right now. However, from a trading point of view, price dictates what we do. Price puts money in our pocket, price takes money out of our pocket, not a fundamental point of view. So I don't see the fundamentals supporting it, but the fact is price is stronger. And part of that is what's going to be happening with Russia is, Trump has done a couple things. One, he tried to shut down their ghost fleet, which really is another way for Russia to sell oil. And they sell a lot to China, India. Those are big consumers of Russian oil. I don't see that in North Korea. I don't see that changing anytime soon. However, Trump also said anybody who deals with Russia, there's a possibility of 100% tariff on that country. So that may dig into that. And that uncertainty, I think, is what's driving the prices we see right now in energy.
All right, strap in, listeners. To the downside we go here. Kicking it off, number 5 for the week. It's silver. So, the metals have to give some back eventually, listeners. And this is that week, apparently. Number 5 is silver, only off a little bit shy of 5%, 4.83%. Silver's had a good run. It's got a little bit to give back, so don't get too upset about it. Number 4, keeping it in the shiny stuff, it's palladium, off a little over 5, about 5.1%. For the week. Number 3, keeping it in precious metals. It's platinum, off 6.2% for the week. And then number 2, we were just talking about maybe this one's starting to claw its way back out like Ether has, and then comes crashing right back to earth. It's OJ, number 2, off about 15.25% for the week. And then number 1, downside mover this week, listeners. As Dan was just talking about, our old pal copper. They giveth and they taketh away on the tariff front, and it had a nice run recently on the back of those tariffs to the upside, also coming crashing back to earth this week, off 21, almost 21.5%. Dan, it's been a good year to be long the metals pretty much, so I don't think anyone's really too broken up about these moves to the downside, but that said, not the best week to be long some metals, sir.
No, it's not. And I think part of it is there's a certain calmness in the market. Precious metals have a tendency to be that barometer, that excuse market. It's where capital goes when there's uncertainty. So high inflation, some kind of conflict, geopolitical events can cause capital to flow towards that complex. But we're not seeing that. We're seeing capital coming away from it. And that may continue if the market stays calm. And right now, there's a lot of craziness out there. But what I mean by that, it's accepting the current environment we're in. And I think that's one of the reasons why we're seeing those metals backing off a bit. And then the copper, that's its own unique little market in that regard. We just had a law passed that on finished copper products, 50%, that's not going to apply to ore or to cathodes. but it does have an impact on the psyche of the market itself. That's an interesting market, I think, Mark, because we don't have a substitute for copper. It's not like you could say, well, if copper's too expensive, let's use so and so. Well, there is no so and so when it comes to copper. So it's ingrained in our economy. We use 400 pounds to 600 pounds of copper in a new home. And we've seen home sales actually a little soft. We use 44 to 99 pounds of copper in a car. If it's an EV car, it's about 4 times that amount, around 200 pounds of copper. So it's a part of our economy. Now let's think about this huge move that you're referring to, 21%. Holy Toledo. Well, let's look at United States. We produce about half of the copper that we consume. About 2/3 of that comes out of Arizona. We import copper. Chile's the biggest importer to the United States, Canada, and then Peru. Those countries is where we get most of our copper. We also need to think about, if you think about a product like that, is refining. We refine about half of what we consume. China, if we go outside the United States, the global supply, China consumes about 50% of the global supply. They refine around 48, almost 50% of global copper. So it's a critical piece there. However, is the China economy hot enough to absorb a demand for copper? And that's where it's kind of debatable. Is copper seeing prices the result of China participating? And I don't think that demand has really shown up the way people are looking for. And now with this 50% tariff, the market just sprinted. But what do we look for now in copper? I look for a sideways market. The copper just absorbed what happened. So now it's going to catch its breath, I believe. So I'm looking for a sideways move for the next few days at least, unless there's something new with copper that we haven't heard about.
Well, we're living in that tweet by tweet market, Dan, so maybe we'll all find out something new about copper, including maybe new tariffs as we speak out there. It's definitely not your typical quiet summer months as we're heading into August. Usually the dog days of summer, Dan, not really hot times out there in the market, but that can all change with the tweet these days, Dan, so things are kind of wild. Is that translating into a lot of volume out there in the futures market today, listeners? Remember, it is Fed Day, so usually on Fed Day, people kind of keep their powder dry in the first half of the session. They kind of see what the Fed is up to. Then they get into gear a little bit more actively. And surprisingly, though, we've used this threshold, this barometer of about 300,000 contracts for kind of a decently active day, and we did actually hit that pretty much exactly right as the show kicked off, listeners. Number 10 is our old pal crude oil. So also interesting, Dan, it's not all equities and rates on a Fed day. Crude oil managing to sneak in there at number 10 with exactly 301,000 contracts. So just coming right across our threshold out there, our old pal WTI, listeners. Number 9 pretty much looks like the rest of our list is, what you'd expect on a Fed day, rates and equities. Number 9, 30-year, 331,000 contracts on the tape. By the way, these are all September contracts, with the exception of one. Can you guess which one it is? Probably can, if you've listened to the show once or twice. Number 8, the Ultra 10-year, 429,000 contracts on the tape. Number 7, our lone December offender on the list. Yep, it's 3 months SOFR, 454,000 contracts on the tape for number 7. Number 6, to the micros we go. The S&P micro, 476,000 contracts on the tape. Again, take the micro volume with a grain of salt, but then again, it's A, laborious to keep removing them every time, and B, it's a decent amount of paper, even if it isn't exactly what the contract volume leads you to believe. Number 5, our old pal, the actual S&P E-mini, 577,000 contracts on the tape there. Number 4, the 2-year note, 675 on the tape. Listen, number 3, it's the NASDAQ Micro, 722,000 contracts. In the past, one of the few contracts that can vie with the 10-year for the top spot. But today, it's actually top 2 are all in the rates. Number 2, 5-year note, a little over 1 million, about 1.05 million contracts. And the big dog, the 10-year, which we'll be coming back to maybe a little bit later in the show. The 10-year, 1.2 million contracts on the tape. Are actually, for those listening on demand, coming back next week for talking a little bit of the old 10-year. But we'll get there in a little bit. Dan, kind of what you'd expect on a Fed day, mostly rates and equities. That said, crude oil did sneak in there, so a little bit of a ray of sunshine in there. Anything catching your eye in our top 10 most active today, sir?
Well, I think you're right on target. The notes and the indices are a logical play. And because what we see is that capital moving between these markets, risk on, risk off. If people are looking at volatility in the stock market and they think it's getting softer, we see it moving over to the interest rate markets. So it's a risk off. And for the interest rate markets, that puts demand on those products. That can bid up the yield. It can soften prices because of that. And so it's absorbing. People say, well, look, I don't want the risk of the stock market right now. I'll take interest rates and I can get some interest. And I don't have to worry about that volatility. But it also means you're not going to get dividends if you're out of the stock market. You're not going to get that upside potential that you're looking for. So right now, though, it looks like people are parking some of their market money into the interest rate markets. And, crude oil is really a unique animal in terms of where it fits in. It's a tough one because if prices go too high, we know it starts affecting the cost of doing business. But if we think about where the industry is, if we think about it from that point of view in terms of numbers, if you look at crude oil, the average cost, or I would say break-even price for many crude oil producers is around $60 a barrel. If you get to 65, depending on their debt load, some of them are losing money. If you get to 70, that's where their sweet spot is in terms of, which is about where we are, where they have a potential for making money. So that $60 to $70 a barrel is an important levels when it comes to crude oil production. And right now, it's at a spot where if you and I are going to horizontally drill for crude oil, this may be an attractive price level to consider doing that. So it's its own unique spot in that list that we just went through.
Yeah, didn't expect to be talking this much crude oil on Fed Day, Dan, but you know what? Market gives us what it gives us, and we roll with it, Dan. That's kind of the fun of doing this show as we keep on rolling out to, we talked about what's moving and shaking today. We talked about what's moving and shaking for the week. Let's expand that purview one more time, shall we, Dan? Let's go out to a full year-to-date analysis. I've been saying this for a while now on the show. Really, so many products have lived many lives just so far this year, Dan. They've been winners, they've been losers, all kinds of wild stuff going on out there. Let's go to our downside top 5, or really bottom 5, if you want to put it, for the year. Unless you're heavily short all of these, then you love them. Number 5 to the downside for the year, listeners, it's our old pal, a soybean meal, giving up a little over 16, about 16.5% for the year. Number 4, keeping it in the rates, it's good old hard red spring wheat, off 16.75% for number 4. Number 3, it's cocoa, off about 17.25%. So a bit of a trend there for our bottom 3 there. Number 2, one of the EMs. Can you guess which one? Yeah, it's lithium again. off 20.33% for the year. And our number one, it's been a frequent offender to the downside, also our worst offender, our biggest loser, if you will, for quite some time. Our old pal, good old OJ, off 36.25% for the year. Dan, a rough year for OJ, and not a great year for a lot of these ags we're talking about, and then sprinkle in a little bit of lithium. And it's an interesting year out there. Anything catching your eye to the dark side for the year, sir?
Well, I think soybean meal, the first one you mentioned, is interesting. It's if you think about soybeans, we take soybeans, we crush them, and we get soybean oil, soybean meal. Soybean meal is a high protein animal feed. And if you look at where we are with our meats in terms of cattle and hogs, we're seeing some of the downward pressure there, which also takes off pressure on soybean meal. But that doesn't mean the complex is a lot weaker. Soybean meal is down, but soybean oil is another one to take a look at. I think the other ones are logical. Some of the cocoa pressure that we saw recently earlier in the year in terms of shipment, supply. If you look at Ghana and Ivory Coast, their yields were down. And most of that cocoa, by the way, goes to Europe. But there we saw some downward pressure there in those markets, or I should say upward pressure, but that's cooled off. So the global supply of cocoa isn't the same as it was just a few months ago, and it's reflected in those prices. And orange juice also, it's that weather crop, the uncertainty of the impact of weather in terms of yield. And that's what we're looking at there, and that cooled off. It didn't have the anxiety level that it started with, and it's reflected in that big move is that we're seeing here to the downside.
All right, let's keep talking about some big moves, Dan. We got a little bit of controversy in our top 5 movers. We're going to expand this list to top 7 or 8 for the year, Dan. You'll see what I'm talking about in a second, listeners. So if we expand our list all the way, I think, to our quote-unquote real top 5, let's kick it off here in feeder cattle, up about 27.5% for the year. So a good year out there on the livestock front. Number 4, going back to the precious metals. That's why I said they have some to give up this week, because it's been a good run for a lot of the metals, including palladium, number 4, up nearly 33% for the year. Number 3, we have a bit of a combo, of course, our old pal, the big and the micro Bitcoin futures. Up here, looking here on our data here, Dan, is showing about 34, almost 35% for the year. And again, that might get into an issue with some of the tracking with the futures versus the spot. Some folks may have issue with that as well. Might think Bitcoin's up a little bit less than that as well. So we'll get into all that in a second when I finish breaking down the list. And then we've got number 2, our old pal, soybean oil, Dan, up 37.5% for the year. And then the, I think, official number 1, I put official in air quotes, you'll see why in a second, listeners, is our old pal platinum. Again, the metal's having a good run this year. If we expand this one more slot, we'd see silver out there pretty much at number 6. So a good year to get precious platinum, up 44% pretty much for the year. Now, Dan, that's why I put in air quotes our list, because if you actually look at our data here, listeners, you will see that it is showing us the actual number 1 year-to-date winner, Dan. It's showing us as ETH. ETH up about 2/3, 66% year-to-date. Now, I know ETH's had a great year. ETH had a terrible year for most of the year. It's our biggest story of the year, I think, in the futures market. We talk about in the crypto rundown, obviously, but also here, because as a futures product, it's just been wild to watch. It sold off 50-odd%, pretty close to it in the first half of the year, and then started clawing its way back just in the last few months, Dan, and now has clawed its way back. The issue comes here again with the data. Our data here is showing up 66% for the year, but again, I think ETH is up, I think, closer to 10 or 11%. Again, this gets to the issue with tracking the spot, listeners. You pull up ETH right now on just about any platform you want to trade it on, chances are they're going to quote you the spot. We're looking here at the futures, And we did a whole episode actually about this in the early run of the show, episode 7, listeners. So you gotta go back a little ways. It's to episode 7 from October 16th of this year. We talked about the trouble with futures prices and how difficult it is. Think about it, listeners, to have a long-term tracking chart of a futures price, because guess what? Futures expire. So you have a lot of issues to grapple with. Some folks like a constant maturity. Others take what is the more common kind of a rolling front month approach with historical data. That's what we're doing here, but sometimes I think it can lead to, shall we say, a little bits of errant data out here. And I think that's where that 66%, or maybe you think, Dan, maybe you think ETH is up 66% for the year. So where do you fall on this? And do you think ETH really is the number one? I think actually around 10 or 11% would probably put it somewhere in our top 20 for the year. Still looking great compared to down 50%, Dan. But I don't know. I think I take issue with this up 66%. But I'm going to do a little bit more digging after the show. And then what else do you think about the rest of our top 5 for the year, sir?
Well, I think Ether has attracted a lot of attention. The percentage of growth, I'm not so sure about, but you're right in terms of how you create a continuous chart for futures. And one front month to the next is the most common approach. When you roll from one contract to another, that varies. Some software allows you to pick that. Some people roll on volume. When volume shifts to the next contract, that's when they move to that contract. So there are a lot of different approaches to it, but boy, it has attracted attention. Although last couple days, we've seen sellers at these high levels in Ether. And what's interesting about it is it just buyers selling to take profits, or is it something more ominous in the future? And I think the next week, 2 to 5 days, should tell us a lot about longer term action in that market. So we've seen the selling. If we indeed come lower, which is what's expected, how it comes lower, I think will give us that longer term point of view. Soybean oil, you mentioned, it goes back to biofuel. We have some government requirements in terms of what we use, how much of that biofuel we do use. That creates a demand for soybean oil. It's 30 to 50% of our crop, depending on whose statistics you're looking at. But that's one of the reasons why you see that positive side for oil, where we didn't see that when we were talking about meal. And Bitcoin, well, Bitcoin has, I would say, the pathway has opened for Bitcoin. We have an ETF, which is a game changer. Futures are important. And when it comes to developing product, you want a futures and you want an ETF. And the reason is, for market makers, they can trade back and forth between those two. So you need that to lay off risk. When we got the ETF, not only does it help the market makers, but it also helps institutions. If I'm a pension fund and I want to touch crypto, I can't trade that physical, but I can. And I can't trade futures because it's a derivative, but I can trade a security. So it opens the door for that. That really made the crypto a little more legitimate. And plus, we also see Washington being favorable to the crypto market. And I think it's reflected in what we're seeing here and what you're guiding us through. So I think that part makes sense.
Now let's see if some of the feedback from our listeners makes sense, Dan. You know what? Spoiler alert, it always does. As we get to a little bit of the old futures free-for-all.
Ring the bell. It's time to take on all comers in an epic Q&A battle royale. All questions can enter, but none can leave without an answer. It's time for the Futures Free-for-All.
All right, everybody, let's get to the contract. Excuse me, wrong segment. Let's get to the Futures Free-for-All, where you folks take the reins, your questions, your comments. Dan, you have a lot of fans in our pro chat. As you were talking about the Fed, we got a lot of votes in our pro chat for you for Fed chair. What do you think, Dan? You want to run for the Fed chair?
Well, I really appreciate that thought of confidence. I don't think I'm the guy for the job.
I think Powell might like you in there right now with all these dissenters he's getting. He might like a little Dan the Man backing him up in the old Fed meetings.
I think he's ready to probably change seats with somebody else, but that really makes me laugh. Well, thank you very much, everyone, for your kind thoughts.
There we go. Dan for Fed chair. I'm going to start making little buttons. And even though we don't really vote on it, voting body of one when it comes to the Fed chair. But we'll make buttons nonetheless, Dan. It'll be fun. All right, let's keep rolling. We actually got some other questions coming in. Then we have one that was sent in earlier. Let's go to the ones from our live first, Dan. This one comes from Mr. Unlimited. This was the news overnight. Pretty terrible news. It turned out to be pretty decent, but it looked kind of dire overnight. Of course, the news about this earthquake off the coast of Russia. And then, of course, tsunami warnings for the entire Pacific Rim, which is kind of wild to see that stuff again. It looks like, for the most part, it didn't turn out to be as dire as they were predicting, which is a good thing. Mr. Unlimited in our chat said, I wonder if that earthquake tsunami messed with some ags. I know this year the weather feels more drastic. I think Mark had someone on before that was a meteorologist. Yes, we have had meteorologists on the network in the past. Maybe a good time to bring some of them on again. We have had, as you pointed out, some wild weather. Just looking at the Chicagoland area, we had a dust storm here for the first time that I can ever remember, not that long ago. That's obviously going to wreak some havoc on the Midwestern crop here. Of course, a tsunami. Like I said, it seems like, and I think our other member, Frank, pointed it out, wouldn't it be too early for this to have messed with the ags? Wouldn't we see that more in a month or so? I don't think the tsunami really amounted to that much. But that said, Dan, what are your thoughts from our listeners on the tsunami and some of these other drastic weather events we're seeing out there and their impact on the ag, sir?
Well, one of the first things that I did, I reached out to people I know in Japan, and they hadn't so far seen anything, no drama as far as a tsunami goes there. And apparently Hawaii, the west coast of the United States, so far has been not too dramatic in that regard. Nothing like what we saw in Japan in March 2011, the Fukushima disaster. But when I think about the weather where we are right now, and I live in the Chicago area, so for Illinois, and in the Midwest, actually, July and August, those 2 months are critical for growth in a lot of our ags. For soybeans, for example, soybeans can get away without much moisture until August. First few weeks in August, it needs to get subsoil moisture because that impacts the number of flowers, it impacts the number of pods, it impacts the yield that we get. Corn so far this year is looking pretty healthy. We've gotten rain in some of the areas where we needed it, so that's positive. The weather systems that we've had have been kind of bizarre. It's like you said, Mark, a dust storm. My God, I was in shock with that too. I thought, here we're going to get dust, but we did. But what's fortunate enough, and apparently it did not cause too much of our topsoil to blow to Chicago. And we're still in fairly good conditions when it comes to the ag markets. So we are at a critical time period. So we do want to pay attention to that. When we plant crops. The issue is, can we plant them in the time frame that we need? If it's too wet, we can't get the equipment out there. If it's too wet, it means corn does not, the roots do not grow deep enough to handle dry weather. So that becomes critical for us in that regard. And so we're at the spot right now in our growth cycle, which is fixed. And right now we're looking to see what happens in August. Do we get the rain? Do we get that subsoil moisture that we're looking for? So it's a very interesting time of year.
That was my first thought, Dan, when I saw that dust cloud descending upon Chicago. All of the topsoil for all the growing crop in Illinois is just landing on the balcony outside our studio right now. It just didn't seem like it was boding well for the future of the crop. So, yes.
I know, Mark, but here's the thing. I felt the same way. Like, wow, is this bizarre? I just had my car washed, and I couldn't believe it. But what we want to remember is how much of our topsoil got blown away. It's like the old thing where, if it rains on LaSalle Street, the eggs would go down because the traders at the Board of Trade would say, oh, we got plenty of rain on LaSalle Street. But did it rain in the growing areas that we needed? It's like in New York, if it would be cold, as traders would go into the NYMEX and they'd say, oh, it's cold out here, so heating oil should be going up. It's not necessarily accurate in terms of the bigger picture. And I think the feelings that we had when we saw dust, which I had never seen before, is how bad is it? What percentage of our crop did it have an impact on? So if you look at Ohio, Illinois, Michigan, Wisconsin, Iowa, Kansas, those states, where did they experience that? And many of them didn't. So our crops really aren't in too bad a shape. And depending on where these tariffs finish out, that may have a big impact on demand for our products. And we're seeing some signs of demand coming in, so it doesn't look too bad. I'm sorry, there's just one more thing.
Oh, sure.
Whenever you and I think about ags, we are just one piece of the puzzle, because you need to think about where we fit in globally. The US dollar has an impact. The stronger the dollar, the more expensive our crops are. And when China goes shopping, just like you and me, when we go shopping, where do I get the biggest bang for our buck? Or they say, where do I get the biggest bang for my yuan? Do I buy U.S. soybeans? Brazil, which is now the largest exporter of soybeans? Argentina, Paraguay? Where do I go to get that? If you're buying wheat, you need to think about Russia, who's had a very good crop, Ukraine, those parts of the world, where are they fitting? If you think of Europe, you want to think of France. They grow the largest amount of wheat in Europe. Or we think about our friends in Canada, big wheat grower there. Argentina, Australia, also a big producer of wheat. So, China does their shopping just like you and I do, only it just happens to be countries and it happens to be different crops, but same principles.
All right, let's get out of here for this week on another question, or really more of a comment from another of our pro members. Pro members heavily represented on the show today. This comes from Chris Lovell. He just wanted to send in a belated thank you for this show, for the Futures Rundown. He said, to Mark and to the lovely Carly Garner, who is not on this week, but indeed quite lovely. You are correct. Apologies for the late reply, but thank you so much for the deep dive into 3-month SOFR. Yes, we did do that, Carly and I, on the show a few months back. If you are intrigued or perhaps terrified by all things 3-month SOFR, make sure to check that one out, listeners out there. He says, please keep up the deep dives. I love the detailed knowledge. Well, if that's the case, Chris, stay tuned If you're hanging out in the live, you'll be able to hear it next, listeners. Otherwise, Dan and I are going to come back right after this show to do a deep dive into all things 10-year note. So stay tuned for that. If you're listening on demand, that'll be hitting you next week on the network. He says, I also loved the volatility deathmatch. Mark, I could see you matchmaking a fight in the pits, then simultaneously announcing the play-by-play and making the market on the fight. The mean gene of options. Ooh, high praise. Thank you, sir. The Don King of open outcry. Ooh, maybe lesser praise for Don King, but I'll take it. Thank you. Grazie mille, Chris. Well, thank you. A million thanks back to you, Mr. Chris, out there, for taking, everyone took the time to write in and who are enjoying the show. All right, Dan, that music means we're done for this week, but you and I are not done. If you're hanging out in the live, like I said, stay tuned. We'll be back in a little bit to talk all things 10-year note. But before we go, in the meantime, Dan, if folks want to check out all those cool videos you're cooking up, where should they go? What should they do, sir?
Well, they could visit dangramza.com. There is a free daily video. I select out of 22 markets, a variety of different markets. And there you'll see red and green lines, which represent buy and sell levels. These are not recommendations, but ideas that I want to share of where I see things unfolding. And you can go back 10 years and look at, all right, what did he say when this happened? So you can play previous videos to see how these lines changed and commentary changed. There's also a course that talks about the techniques that I use and also trade management. And there's a more advanced video which looks in detail at those 22 markets.
There you go. DanGramza.com, GRAMZA.com, the place to go. I have bad news, Dan. DanTheMan.com is taken. I just looked it up while you were talking. But on the plus side, looks like it's parked. Looks like the person isn't using it. So if you make them a reasonable offer, they may be so inclined to move your way. So maybe in the future, listeners, you can go to DanTheMan.com for those videos. In the meantime, go to DanGramza, GRAMZA.com to learn more. If to get on out of here for this week, back again, like we said, instantaneously to talk the 10-year note for all the folks hanging out in our live chat. Everybody else will be getting it next week on the network. If you want to join the live, get all the exclusive shows and everything else we do over there, the giveaways, the fun, theoptionsinsider.com/pro is the place to go. Again, back in a few seconds for our pro members, back again next week for everybody else on the Futures Rundown. And stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.